Hi guys, welcome back to another video. My name is Josh, and in this video I wanted to provide you guys with a portfolio update for January 2020. And as well as that, I'll be talking a little bit about what's been happening in the markets, especially around the coronavirus outbreak. I'll be talking about what I'll be looking for in the markets and what I'll be keeping an eye on. Okay, I'll also go through some of the stock market news that has happened in the past month. So if you're new here, be sure to subscribe. I cover a lot of New Zealand stock market news and cover basically other personal finance and investing topics. This channel has grown significantly over the past month, so I want to thank you guys all for joining in. If you want to show your support to the channel, be sure to like and subscribe, okay? And before we go into the video, this video is purely for entertainment purposes only. This is not financial advice. Always do your own research before investing. Okay, so without further ado, let's go into the video. So this is the public portfolio on Sharesies as part of the series that I do. This is the January 31st balance. So we currently have a portfolio value of $2,996.82. And the public portfolio has experienced a gain of 7.08%, which is about $201. And you can see here the value gap. This portfolio was started on the 1st of August at about $1,000. And currently it's sitting at $2,291. So this value gap here has been growing significantly, as you can see. So there's not much of a value gap here. You can't really see it. And then now we can see the value gap difference between the pink line and the dotted lines, and that shows us the power of compounding effect, right? As you can see, the returns have only been 200 and the rest is not returns. So the rest are basically my contributions to the fund. This year I've made it a goal of mine to double my contributions from last year. So each week last year I've been depositing $35. This year each week I'll be depositing in about $70. So double from 35 to 70, as well as that for each 100 subs I'll deposit in $100, and this channel has grown significantly in the past month. In January, I think I deposited $200 because of that. As well as that, we have people using the Sharesies referral link to sign up with Sharesies. I get $5 when each person does that. So as you can see, this $5 here was because someone used the referral link this morning. So I got that $5, and all of that money will be reinvested back into the public portfolio. So expect to see this green number increase over time as the portfolio gets to grow more. Okay, and here is what makes up the fund. We have about half the portfolio made up by ETFs, the majority being ETFs from overseas countries such as Australia, the US, and other emerging markets. And the rest of it is made up of individual stocks. So these are stocks that are individually picked, and they make up about 49% of the portfolio. So I made a spreadsheet as well detailing all of this to make it easier for us to get insights into what I've been buying more than others and tracking the gains on the portfolio as well. So as you can see here, we have a breakdown of the allocation with the type of stock, and you can see over half of it is made up by really 4 big chunks here. And these are Somerset, the US 500, and the Aussie mid-cap and emerging markets. And this percentage change here highlights what I've been buying more than others. I don't sell stocks here. I only buy more, especially in January. I haven't sold anything. And you can see that Somerset hasn't been increasing. That has been decreasing, dropped by 1.6%. And what's increased significantly has been the ETFs, okay? So the US 500, the Aussie Mid-Cap, and the Emerging Markets Fund. And the reason why it's increased quite significantly in the past month is because of, the coronavirus outbreak. There's been a lot of uncertainty in the markets, and we can really see that here in the S&P 500 graph. So in the past month, it had a good start to the year. And it started dipping at the start of around 23rd of Jan when the coronavirus really made the news, okay? So that has been a wild ride. So I've been taking advantage of that and been buying more ETFs. And the reason being is that I don't really see any opportunities in the New Zealand market as such. There's not been any particular stocks that have been dropping significantly, but I'll cover that later on. Going back to the spreadsheet. These are the other stocks that I have as well: Heartland Bank, NZX, NZ Energy, Argosy, Precinct, and Mainfreight. So I've been topping the low allocation stocks to make them a bigger percentage. Mainfreight has taken a bit of a dip during the month, and so I took the opportunity there to buy more stocks in them. As you can see here, this is the portfolio at market value, which is $2,992, and that has been a $742 increase from the prior month. So last month, this public portfolio was at $2,250. This month, it's grown by $742. And the growth is due to my contributions as well as you guys using the referral link. Because we can see that the adjusted returns have actually dropped. Okay, this month was a rough month for this portfolio. It's dropped by 1.88% roughly to give us an adjusted return of 7.95%. And we have a gross dividend yield of 3.57%. And that is still above what you would get in a term deposit at a bank, so very decent. I'm happy with it. So I expect the dividends have grown as well with our portfolio increasing. Okay, so that is the public portfolio. Now, to talk about some market news, what's been happening. Coronavirus has been spreading significantly, as you can see. Almost 10,000 confirmed cases now, and this is a map of where it is. So mainly in China, really, but there's a few confirmed cases in Aussie. None on New Zealand's map yet, but I saw something on the news about a man being suspected victim in a Auckland hospital. So I don't think that's confirmed yet because that's not shown on the map. But majority of it is in China. Total deaths have been at 213. So at the start of last week, I think it was, within 40s to 60s, and now the number of deaths have increased significantly. And you can see on this graph here as well, the number of confirmed cases really shot up through the roof, okay? So in mainland China, it was about 916 about a week ago, and now it's at 10,000. So this virus is definitely growing significantly, with the World Health Organization declaring it an emergency. And what this does is that it spooks markets, right? People get uncertain and scared about the future, whether, because of what's happening in China, that consumption will go down and these profits from companies will take a hit. And so this is why it drives a sell down, is because, when you have viruses like this, people tend not to go out, productivity drops, and companies don't make as much profit ultimately. And that's what spooks markets so much. And the markets are trying to understand how far this will go. The longer it goes on, obviously that would have a sustained drag on the market. If we're able to contain this and the virus, there's a cure for it, then expect the markets to continue to rebound. So that's my expectation of what the coronavirus is going to have on the stock markets. There's a few stocks that I'm looking at closely. So one of them being Air New Zealand. In the past month, it has dropped about 7.5%. So, obviously less people flying in and out from China. This will have an impact on tourism, tourism, airlines companies, airports especially as well. Less people, less traffic means less profit for these companies. So Air New Zealand is one of them that I'm looking at. For me, it hasn't really dropped significantly enough for me to start dipping my toes in there. So this is one that I'm looking at, and if it continues to dip further, I might start to nibble a little bit and start buying in small chunks. Auckland Airport as well, taking a closer look at that. Auckland Airport is a monopoly, so any dips on this could pique my interest a little bit, but for me, it hasn't really dropped significantly enough. And our stock market darling A2 Milk has dropped as well, and this is usually because it is a large proponent of the NZX 50, so when there's a sell-off, usually there's a sell-off in A2 Milk as well. Most of it will be due to market sentiment. Hasn't really dropped enough significantly for me to start being interested in it. So what did I do with my money then? I just bought the ETFs. I just bought the US 500, the S&P 500, because, you know, I bought it on dips, as well as the Aussie and the emerging markets fund. As you can see, the emerging markets fund did dip quite significantly in the past week. So I put a lot of money into that, as well as the US 500. If I go back into a month, there was a little bit of a dip here, and tomorrow, well, Monday, the next trading day, will be a dip as well, because the S&P 500 has had a 2% drop just this morning. Okay, so that is what happened in the public portfolio. So I'll be keeping an eye out on these stocks, and if they continue to drop further, I might start buying them. Okay. In other news, Augusta Capital has had a offer of takeover at $2 per share. That sent the share price roaring, jump of about 18% on the day. And they had a takeover offer of $2. So why is there a difference between the $1.97 and the $2? Some people have asked, and that's because of the time value of money. You won't get your $2 until later on in the year, when, you know, everything goes through, when shareholders vote, as well as getting the customary regulatory approvals. So there's always a chance that that fails as well, and so that's why there's that discount here, to take into account of that little bit of uncertainty. Same story with MetLife, really. They had an offer for $7, but they're trading at $6.87, and that is the discount between when you will actually get that $7, as well as discounting for any risk involved. So if those approvals don't go through, then expect the share price to drop significantly. And so that is the risk there. If you want to buy now, there's not a lot of money left on the table. With Augusta, there's about 1.5% there on the table, and with MetLife around there as well. So not a lot of money left on the table. But what I do want to highlight is that these two companies will now be delisted after, if the offer goes through and the companies do get subsequently taken over. This will be two less companies on the New Zealand Stock Exchange, and what this means is that there'll be less options for shareholders. And this is a good temporary short-term gain for some of these shareholders in these companies, but in the long term, it's a bit of a tricky situation, because these companies eventually will grow over time and they will exceed their valuation. But at the same time, shareholders, if you give me a 30% premium at current prices, I'll take it as well, right? So that's that short-term and long-term trade-off. And this is not so good for New Zealand's capital markets. We don't have a lot of publicly listed companies, and it'll continue to decrease over time if takeovers continue at this rate. Okay, so I'm keeping an eye out on that. So that is really takeover news done. But this week, going into the next week, it's important that you have some cash on hand, because I think the market could continue to drop with more cases showing up with the coronavirus. So be sure you have cash on hand to take advantage of any opportunities out there. And yeah, slowly dollar cost average into the market. You can buy small amounts at a time. Don't put all your money in at once. And it's situations like this that really highlights why we need to have some cash on hand, because, at the start of the year, everything was going rosy, and out of nowhere, this virus came in, right, and sent the markets down. So we can never predict events like these, but we can always prepare ourselves with having adequate cash on hand to take advantage of situations like this. Dollar cost averaging is a very good technique to use. Okay, so I hope you enjoyed this public portfolio update. For more future updates as well, be sure to check out my Instagram page. I post weekly on that about the public portfolio as well. All right, guys, so until next time, guys, take care.